What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It's June 30th of 2022 and the quarter just wrapped up. What a wild first half of the year. Apparently, I was just looking through a stat. This is the worst start of the year since about 1970. The NASDAQ is down 30%. So let's go ahead. Let's pour one out for all the hedge funds that blew up, all the funds that didn't make it, all the subscription sellers that didn't make it, and really just all of the fallen soldiers. We are still here. If you're watching these videos, you've made it through a really tough quarter and a really tough first half of the year. Now tomorrow is a brand new, fresh start. It is the best time to turn over a new leaf in your trading. But let's go ahead and let's recap today's price action. Let's go ahead and dive in. Box scores for today. We had the S&P 500. It finished down 0.81%. We had our NASDAQ QQQ finishing down 1.24%. Our IWM small caps finished down 0.78%. Our dogs of the Dow were down 0.72%. And our ARK Innovation ETF finished down 3.93%. You can see pretty much all of these indices closed towards the middle end of their day's range. A lot of these really just put in doji candles. Volatility ended the session higher, but barely. It's pretty nuts. We had some severe intraday volatility, a lot of heavy selling throughout the session. Breadth ended up coming off the lows. This morning, when we opened up, we had about 8% up volume. It was pretty bleak, and you can see some of these various parts of the market started to come online as the day progressed. My trend model remains at a -1 reading. Crude oil month-to-date performance. We have been tracking this like Hawks team because we know that the next CPI print is going to hinge on crude oil. Well, the month of June is finally behind us. Crude oil finished the month down 7.72%. That is compared to a 12% increase in May. And I think there's a high chance that we do get a deceleration in the CPI print. That's going to come out on July 13th. Finviz heat map, weakness across the board. You can see there were some stronger spots. One of our Pristine Capital members very early in the session brought up the relative strength in NOC, which is one of these aerospace and defense names. Energy was weak throughout the session. I ended up closing out my XLE put options. That was a pretty nice trade. And yeah, you can see all these megas pretty much fell today. The semiconductors have had a rough go of it for the past couple days. We did just get Micron Earnings after the bell. They guided down. It was a significant guide down. It was like they were looking for like $9 in earnings for the next quarter. They guided down to like $7. Pretty rough stuff. Micron stock ended up flipping green in the after hours. So semiconductor is definitely a group to look out for tomorrow. Because the fact that that happened on such a big reduction in guidance, that basically says to me that there might be some players that are a little washed out of their semis. KWeb remains in our top momentum slot. Look at that 18.55% monthly performance. Let's take a look at some of these areas that were strong. Aerospace and defense up 1.82%. And our solar energy ETF. We are long two solar stocks. We're long Enphase. And if you watched yesterday's video, you know that we got long DQ. So we were able to take advantage of that relative strength. Best performing style factor on the session was Minvol, followed by Momentum, which is not too shabby. Worst performer was high beta stocks. S&P 500. You can see we ended up putting in a hammer candle, which is not too bad. The market ended up gapping much lower this morning, and it looked like we could have a scary session. You know, on a month end and a quarter end, you never know what the river could bring you. And so I'm glad to see that we did not close on the lows. You also can note that there's a brand new monthly value area. So I'm going to be sending out these levels for the new monthly value areas to all Pristine Capital members. You'll be able to see that in your inbox as of tomorrow morning. But take a look. Now we're inside of value as opposed to trending below it like we were for a good part of June. So not too shabby. Let's also take a look at our hourly chart. I was watching this pretty closely today, and take a look at this. We actually shook out below this weekly point of control, and pretty violent move here, and then buyer stepped in and we pushed higher. We did try to test above this weekly value area high, but we ended up failing, and we closed inside of this weekly value area. NASDAQ also inside of this brand new monthly value area, And you can see very similar. We put in a nice little hammer candle there. Russell 2000. We finished down, also put in a hammer candle. And you can see we're also inside of this new monthly value area. Dow Jones, also same exact deal, the hammer candle. We're actually above this new monthly point of control. So the indices, here's the thing. There's a lot of people out there, they think, oh my gosh, this market's just going to crater into the abyss. It certainly could. But I think at this point, the next thing that I'm looking for in all of these indices is, okay, we moved to the upside. We failed at the 20-day simple moving average, but we're still within striking distance of the 20-day. Now the real question is, do some of these indices start to make higher lows? And from there, we could have a very actionable pivot to trades. That's the real question. Or are we just gonna, fully retest these lows or potentially even make lower lows? My baseline assumption is that we are gonna put in a higher low and we could move a bit higher into July. The seasonality is fantastic in July, and like we've been following, we could have an inflation deceleration. So what did we do? So far for today, no common stock trades, because again, we put on DQ yesterday, we put on PRVA. In terms of options trades, I did go ahead and closed out the remaining half of my XLE August 19th 75 strike puts, closed those out for $6.10. I'd paid $4.25 for those, nailed down some decent profits in that group. And then I added to my SPY July 15th, 382 calls for 484. This was at 9:52 a.m. And I wrote here, this seems like some sort of mechanical flush into month end. Gonna take the other side of the capitulators. Because when you get to month end, and it can be tough to conceptualize for people that never worked in the industry, but basically what's happening is like these fund managers, these institutions, they all get graded on their monthly and more importantly, quarterly performance. There's going to be a lot of clients that they're going to say, okay, what's in my portfolio at the end of the quarter? What does my quarterly performance look like? They might have incentives that are tied to that. They might have risk management metrics that are tied to where they are at the end of the quarter. Now, the thing about the asset management industry, it's pretty much the way it works. The more the market goes down, the less ability to take risk a lot of these fund managers have. So for all we know, there could have been some cleaning of the deck into quarter end. Hey, let's show these clients that, the market was horrible, worst beginning 2 years in the 1970, and we weren't 100% long. That wasn't us. So they could be cleaning things up into the end of the month, end of the quarter, for all we know. Then the way that it works is like once the new quarter starts, like let's say you had like a horrible prior quarter. You're like XYZ fund manager. You didn't get your bonus. Oh man, horrible. Now this new quarter is starting and it's almost like you're playing a brand new game. So for all we know, there could be a bunch of chips that have to get taken off on the last day of the quarter just to see those chips put right back on. So that's why I put in our Discord early on in the session, hey, this heavy selling that we're seeing into quarter end, I think this is another situation where a lot of these sellers are going to end up regretting it pretty shortly. There were some areas of relative strength in the market. Let's take a look at those. We had end phase. So one of my core long positions slipped into the abyss for a couple days, but you can see we bounced back with some strength and we're above this 20-day simple moving average. DQ also showing some relative strength today of 6.27%. This is one of, if not the strongest Chinese equity. So yeah, despite all of the craziness in the headline indices and just all this significant selling that was happening, I did have a few names in my portfolio that actually fared well and actually boosted my performance. PRVA, this is another name I added yesterday. Finished the session up 0.21%. So I would say you want to still continue to look out for those potential market leaders, because we are seeing, despite the headline indices still getting destroyed, there are some of these stocks that are starting to move higher and just perform a little bit differently than the rest of the market. Heading into tomorrow, it's Friday. Today almost felt like a Friday, to be honest. But yeah, it's a brand new month. It's a brand new quarter. For me, I want to have the best quarter yet. I want to make sure that I'm really just taking a fresh perspective. It's the best time to work on your trading weaknesses. And let's say you had a rough first 6 months of the year, a rough 3 months of the year. It's really just a time to honestly forgive and forget. Take a look at any mistakes you made. Don't beat yourself up too much, because it's all about your next decision. Because the decision you made yesterday or last month or 3 months ago, That's not really going to benefit you now. What matters is now moving forward. Now's the best time to make a change for the positive. With that being said, I'll leave you off on that. Hope everyone has an awesome evening. And as always, I'll see you all in tomorrow's post-market recap. Have a great night.